Good morning, traders. Thank God it's Friday. Welcome to a new Flow Show. We write 1st of August 2025. Already August. This year is really flying. Well, and we actually knew that with the President of the United States we have to deal with. It was always going to be a pretty exciting, let's call it, year for markets. Before we move over to what is happening, what's happened, and what will happen later today, just a reminder that we still have our 40% discount running on the monthly subscriptions. So if you're not yet a part of our community, please take advantage of this. It won't last forever. But yeah, I mean, as the people say, when they come around, they stay around. And also, you can still put your name and your email address in the box here to be made aware, to be on our mailing list. So you will be aware of all the changes that are coming, and you will also, I don't know exactly what's happening in August, if we're still handing out TFPs, trader funding programs, as a prize, a potential prize that you can win when you are on the list. But I'll let Blake confirm that a bit later today on the Face Show. He'll probably talk about what's going to happen in the month of August. We are gradually moving from Forex analytics into trading analytics, but this is all going to be very exciting. We are going to have a lot of new features coming as well. And yes, there is, as you say, another month, another tariff. It's the story is ongoing. Before I dive into those tariffs, well, there is actually not that much else to talk about, because yesterday was all about what is going to happen on those tariffs, and then we saw obviously the move continuing in the dollar, barring that quick end of month little blip lower in some of the dollar pairs. But that was purely the fixing. Once the fixing was over, the dollar just resumed with what it was doing. Sorry, before. Right. Oh yes, today, and then I'm just staying in the UK for a second. Today, the Supreme Court, and we just keep an eye on that because I'm not sure whether it is the driver or one of the drivers, but we'll have a ruling today from the Supreme Court in the UK, who will announce what they think on those car finance commissions and compensations, which could run into the billions of pounds. But if you look at the moves that we saw as well in the sterling, and then I'll have a look at the euro sterling today because it was pretty interesting. Running into the one day before last of the month, we saw that big drop in euro sterling driven by euro weakness, but also I think it had a lot to do with month end. And since we hit close to month end, the whole euro sterling move has been well, at least a big part of that euro sterling move has been reversed. Sorry, and we are back into the high 86s. I will have a look at that because it's pretty interesting for all things sterling and cable as well. So on the tariffs, on the trade, first of all, before Trump came out in the evening for us, he already set the new deadline of for the end of the Russia war, or at least a truce in the war in Ukraine, and that must be done by the 8th of August. So next week is going to be the deadline for Russia, and then they will know how the US will really react towards them. I trust there will be more another package coming of restrictions towards Russia, or But we never know with the US what else they could do. Maybe a direct involvement also, where the involvement right now is more of the indirect sort right now. Also, we were waiting for the results on what the Mexican talks were going to give us. Well, they decided on a 90-day extension between the US and Mexico, but the conditions, what they put in place, remain the same. So actually, not a lot has changed. So the Mexican peso just had a bit of a blip higher, but then since the market is not really convinced if anything can be resumed, that actually did not last too long, and we saw just in line with the rest of the dollars, we saw the um, the Mexican peso gradually lose ground again. And then the major tariff announcement. So Trump said he would announce something. If you want to have a full list of all those tariffs, I advise you to just go online. There is really all the countries are mentioned in there, but the main ones and was obviously Canada. Although under the USMCA rules, a lot of those tariffs are not really applicable, but Trump found it necessary to announce a tariff on Canada starting from today, actually, where the rest of the tariffs will come into effect rather on the 7th of August. The Canadian tariffs will come into effect today of 35%, which is obviously very steep. A lot has to do with also with the fentanyl, etc. But again, the reason why Canadian dollar is weakening in line with the rest of the dollars, and the Canadian dollar is weakening, but we may think that it hasn't weakened that much, then that is just because under those USMCA rulings, a lot of those tariffs are really not applicable. Okay. But another few noteworthy is that actually Brazil, I think before he said something 40 or 50, so he decided to go for the full 50%. And then he also said that they will apply tariffs on all transshipped goods in general of 40%. And then here is a little interesting one because the market was kind of expecting to have a pretty decent deal with Switzerland, barring pharmaceuticals. We know that pharmaceuticals are a different area, right? Oh, what is happening here? Are a different area, right? But it still maintains 39% on Swiss products, and where the Swiss franc was actually, as it has done over the course of prior months, weakened into the month end. He when he slapped those tariffs on Switzerland, the Swiss franc finally started to reverse course as well. It's a bit of a surprise, I think, to many of us that he really slapped these kind of high tariffs on Switzerland as such. The rest, India was confirmed at 25%. Um, Taiwan also got slapped with a 25%. We need to closely monitor those geopolitics as well, because including Taiwan, we know that it is a very sticky point in the South China Sea as well. Um, so there there should be a bit of a tail there coming as well. With there's a bit more risk coming there as well. And then so he also, what did I notice something else? Okay, and then he maintained obviously India, and but the interesting one in the lot here as well, and that is where I think we may see a bit more support for that currency is Australia. He kept Australia at 10%. So Australia seems to be in the good pages of Trump's book. So Australia was kept at 10%. So that is a little victory for Australia there, okay, and which may have a bit of an impact on all things Australian dollar as well, psychologically in the market. We had a bit of reactions, obviously, but Europe Sefcovic was saying that he thinks the EU-US deal is now good for stability, etc. He can't say anything else because he was one of the main negotiators of the contract. So where the rest of Europe is rather unhappy with the deal, he came out this morning saying that he was pretty happy with it. And then there's still some discussions, etc., ongoing in with Japan. Okay, Japan officials are still um, hoping for those tariffs that Trump slapped onto Japan to be reduced to 15% on chips. They also push for a 15% on autos and auto parts as well from the 25%, as we know. As I've been saying on the shows, the story with Japan doesn't seem to be over. Whether it is Akazawa trying to put everything on paper and seeing where when it can be signed, etc. The rest of the officials is still not completely on board with the trade deal that there is now between the US and Japan. So I think we could still have a bit of moving parts there in the deal, whether it be positive or negative, of course. Okay, and then oh yeah, we had moving over to currencies. Japan's Kato came out and he says he's worried about the moves now in the yen. It's important for FX to remain stable and reflect fundamentals. Well, if you want to know what the fundamentals are, Mr. Kato, they are not brilliant in Japan right now. So I guess that he has to read the FX manual again to see where the fundamentals lie, because the fundamentals in Japan, barring up and down moves in the economy right now, are not really brilliant. They can become much better if they get a better deal, if they get the continued positive cycle in wages, real wages then. But for the time being, those fundamentals in Japan are not really brilliant. Note the tone of the comments. They are not yet talking about speculative moves, okay? That would be a next step before the MOF would be tempted to start to intervene. I don't think we are there yet. If you look at the overall dollar moves, the dollar is moving higher. I don't think Japan could do a lot apart from a psychological effect in stopping this move right now. If they would intervene right here and now, I don't think it would mean much. They will wait also for the data to come, obviously. Okay. So now we are going to look at what's happened on those data exactly. And let's go back to yesterday. So yesterday we had this slew of data coming out of the US. Most of them, as you can see, have been a bit green, where Mr. Powell announced us the PCE to be at 2.5 on the headline number, 2.7 on the core. He missed it again by 0.1. Okay, what are you doing, Mr. Powers? Not giving us the right data. Anyway, very close to where the expectations were, but a bit higher. So a bit sticky on the price index. Also, the revisions, it's not a lot, are 0.1 higher than the first announcement, but it's just the psychological effect of all of this. Okay, that is also keeping the interest rates, the yields a bit higher. The whole data slew that we had from Wednesday, yesterday, and also obviously what is to come today are going to be very important also for the yield environment in the US. And that is really still driving now the dollar as well. Initial jobless claims, no harm done there. This is not an indication of things to worsen right now in the US, and it may just be that the market is now also thinking that the NFP report will be quite good this afternoon as well. All right. Personal income, um, still no big dramas there after a week of a month, sorry, of a negative number. We are back into positive territory. Not spectacularly high, but it is still a positive number. Okay. Consumption also back into the positive territory. We then had the Chicago PMI. It got completely ignored, that one, but have to know as well that this came out a bit more than an hour before those last fixings of the month. So the market probably shrugged it off for a while and then perhaps picked up on that earlier. Canadian GDP for May and June, not really doing great, around the zero. If you take both together, that is not going to support the Canadian dollar um, right now. We also have the weekly earnings in May. It's back looking. A lot of those Canadian data are back looking. We are already the 1st of August right now. Yesterday, end of July, and those were still May figures, okay? But we did see a bit of a give back there as well. So that is also not supportive for the Canadian dollar. What happened next? The balance sheet in the US, it is a normal still runoff. Okay, this is what is in their plans. There is nothing spectacular about this. This is just normal. Don't take it as more QT or so. No, it is part of the plans. Okay. Kiwi building consensus, not great, not great at all. I was and just going to talk about my position just a second. Yesterday, I was long Kiwi yen, which rallied pretty nicely, but when I saw this number and into what may happen today, also looking at how the equity markets reacted and stuff like that, I went out of it. Prefer to take the pips today, not only based on this number, but it was just an addition to my decision making. Australian PMI, manufacturing PMI just above the 50 line, but still okay, no dramas there. We are still in a very, very tight labor market in Japan, where the unemployment rate didn't move. The jobs to application is down, and that is something which may come into consideration for the Bank of Japan as well, perhaps, but they will probably look at this data point as well. Okay. Um, we then had the manufacturing PMI in Japan back below 50, even though this is green because it was only at 48.8 expected. It is back into contraction, which is not really a great number. And then you think back at this industrial production number yesterday, and I told you the manufacturing data, the industrial production data, they are jumpy. If you look at the PMIs, they are not telling us a great story in Japan either, right? Aussie PMI, PPI, sorry, coming in a little bit lower, but again, I think the CPI is more important. It is still, though, a positive number, still above running above 3%. In line with what we saw yesterday in China, the PMI is dipping back below the 50 line as well. It seemingly has still a gradual impact on all things China, delays in the talks, not really getting to an agreement, and now seeing the numbers starting to give back as well. It is not really helping the Chinese picture for now either. Moving over, beg your pardon, moving over to European CPI and PMIs. We had the Dutch CPI out a little bit under the expectations. Eurozone, nothing spectacular there. If you look at it here, came out in line with last month. It is running at ECB's 2% expectation. We can't read anything out of those CPI numbers for any ECB expectations. Where has to be noted that more and more banks are ruling out potential ECB rate cuts for the rest of the year. Now, where much earlier in the year they were expecting like more rate cuts, several, maybe meaning maybe two for for the rest of the year. Now it's only reduced to one for most of them, and a lot of them are now already starting to talk about no more rate cuts from the ECB side. If the situation in Euroland does not deteriorate further, we will have to see how it happens with all with this EU deal. But if all despite all of that, due to those planned spending and investments, mainly in Germany from those German companies as well, if the European situation does not deteriorate further, I can actually see a case for ECB sticking to where they are exactly now. Okay, and then we go into the PMIs. Norwegian unemployment rate ticking up a little bit, but if you look at where they are, 2.2%, yeah, we may find it not great for Norway, but I think that is not really been a factor behind the Norwegian krona weakness. It's really a dollar wrecking ball right now. Spain still a very good performer on the manufacturing PMI data. Still in Eurozone, we know that Spain is one of the countries that is really outperforming the rest, or the good performer among the European countries right now. It's still ongoing. Italy trying to get back to the 50 level, but just not reaching it. French manufacturing anemic, well below the 50 line, and the German manufacturing PMI also running just below the 50 line. It is just not helping the euro. Okay, we're not saying that this is the main reason why euro is down where we are now, and we are actually seeing as we speak another leg lower on the euro dollar, but is for sure not helping the euro. Okay, right. I think then we had the pan-European manufacturing PMI out, and which is just reflecting really what happened above here, still running below below the 50 line as well. Sterling, UK, not really great either. So that has put some additional weight on the cable. Cable is actually, if you look at the majors over the past 24 hours, it's actually the weaker brother of all of them. Okay, cable really has hit hard. We were in the room. We were like a bit wondering why sterling would do better than currencies, but since we ran into month end, and then just after month end, sterling is really giving back everything and more. Okay, cable is actually trading on pretty dangerous levels right now, and we will have a look at that obviously when we look at the rates. What's next? Well, it's pretty simple. We do have a slew of data here. Later in the day, we will have the manufacturing PMIs here, construction spending, and then we will have the ISM manufacturing data. Still a reminder that services are probably a bigger part, but every data point is going to be relatively important right now. We will have and I'm not sure whether this is the final reading. I think it may be the final reading of the Michigan. We know how that works. If the consumer expects lower inflation, the consumer expectations and sentiment data are going to be higher, and vice versa. It's just a system of communicating vases, what we have in those Michigan data. We will have one of those Atlanta GDP now expectations as well. There's about 20 more to come of those in Q3. Moving on, but then of course the important number to start the month, to end the week. So new month, new energy. Although it's we are in the summer months where people may think that we will have this number and then that'll be end of the story. I wouldn't think so, just for the reason that Powell himself over the FOMC has told us that employment is going to be a big factor. Before the next FOMC meeting, we will have two of those reports. But this one, if it comes out much worse or much better than expected, is probably going to prepare his Jackson Hole speech at the end of August. So this is an important report, in my opinion. I usually, for some of the data, which retail traders or people in the community may think that they are important data and everything can be a game changer. I usually am always a bit on the cautious side. I mean, not every data point is a game changer. This one, just because he told us, and there will be a reaction of Trump as well on the back of it. We may be sure of that. This one is going to be important, okay, because it's not yet expected to fall out of bed. Expectations, the wider expectations, we even have somebody is expecting zero, but in the banks, but the wider expectations are somewhere between let's say 70 and 130, 40. But it's going to be important, and it's going to be important for two reasons, because it may be one of the first reports where we are going to see some of layoffs impacts, which are actually still expected only to show in the August data and September exact rather as well data. But if we would get a weaker one here, then I think some in the market, and especially probably in the bond market, and then when you look at equities, the reaction that we had yesterday on those tariffs, and which is continuing today, maybe some people who have been buying a lot of dollars over the past couple of sessions will have to rethink. And then you have the NFP number, but where I think this is going to become increasingly important is the unemployment rate. Okay. Yes, you have all those subcomponents and the earnings. Of course, is if the earnings start to drop off, it's not going to be a good sign as well. But this one here, the Fed is expecting somewhere a range, okay, a range with the top end being 4.3, 4.4%. Okay, people say some people think that it's going to have to tick up above 4.5, 4.67 before the Fed is really going to be thinking about cutting. I am I am really thinking that it's not going to have to go up to there. I think a 4.4, 4.5 may already push the market to think that September is back on the table for a cut. Okay, this is in the case of a weak one. All right, and then I think we may have a bit of a reaction as we've seen. You can compare it to the April maybe reaction where Trump was threatening to slap big tariffs, where the equity market went down, the bond market went flying, and the dollar went down at the same time. Okay, this may be some kind of a reaction we are going to see, providing this is a very bad report. And then I'm going on to the next step, which would be, or the less bad step, which would be we have a report, give and take, even this number is 80, okay, 80K, which is about the line now of growth or destruction in the labor market, which this is a number that has gradually been coming down over the years as well. It's running, and we had a discussion about that with Michael Brown in our room as well a couple of days ago. Where is this line, and how long has it been there, etc. But we both are like on the same line. The number is around 80K for growth or destruction in the payrolls number. Um, if we get this 80, we may see bit of a immediate reaction, algo reaction. Even if this moves up to 4.3, it's still going to be just around the top end, or maybe even a tenth of a percent below the top end of the Fed expectations. We may see a little bit of an algo reaction on the dollar, but looking at how this market looks towards those trade deals, those who have been signed, where actually clear victories right now, if you take them at face value for the US, we may still be in a scenario where we have a little bit of a reaction lower in the dollar, and then the market just gets back onto the train of buying dollars. That is that report. Get a better than expected report. Well, I mean, defying the laws of gravity, we know that is going what that is going to do to the dollar. It's probably just going to continue. Okay, continue. We if the report is better, this drop that we see in the equity markets right now, especially in the U.S. market, could partially be reversed as well. Okay, but the yields are probably going to remain rather high. Okay, if we get a beat of this number, and a beat of this number is of course going to tell the markets and then remind the markets of the earlier part of Powell's press conference, saying that the US economy is still in a good place. Okay, so this is about the scenarios that I can see for this afternoon, and then we will look at what this is going to do with rates. Okay, so we are below, and I've encircled that because, as you know, on the prior shows, I think it is a relatively important level. Of course, the 115 on the euro dollar is psychologically important, but I think already the 114 and a half above below a close would be kind of enough to perhaps give a bit of a impetus maybe for next week or so, but a close above or below. Okay, get that weak one, but not weak enough to change the Fed's perceptions also, and the market perception. We could see a bit of a knee-jerk reaction here in the euro dollar, but it probably be short-lived. Okay, you get somewhere in between, or even touching 114.90 possible, but then I think it's probably going to reverse again. Okay, through 115, that means that the job report would still be will be a bad one, and we will probably move higher. Thinking back on what I said on the other data, the PMIs, they are pushed to the back end of the importance. Okay, it's all going to be about the job report, but get a bad one in bad PMIs or a good one in good PMIs. The PMIs may all of a sudden become a kicker of everything. Okay, so that is something to just keep in the back of our mind if we would see several waves of moves in the dollar this afternoon. But again, if this has to break back above 115, it's really going to be a bad report. The risk is that it's jumping just a little bit back above this 114 line. But if I take this away, the risk is that we are going to see a move down to 113.60. And if the report is really better than expected, we may even, and that is what a lot of patterns, whether it be harmonics, etc., people are looking at this move back into the 112 zone somewhere. This is, if the report is really good, this is very possible. And if we get really, really good data, it may be going very, very, very fast. And I'm not going to exclude anything, okay? Because the way this dollar trades, I'm not going to exclude anything, okay? A real bad one may, as I said, put the people to think about why are we buying all those dollars right now. But if it's really good, the same people will say like, well, I'm going to buy a few more. And maybe some of those longer termers that have been rebalancing outside of the US may want or will probably have a think about their position as well. Okay. Where is this whole thing really in danger? Well, I think start with 112, 30, and then look at this one around 110. But we are not there yet, okay? As I always say, one step at a time, one step at the time, okay? Yes, indeed, Brand, that 61.8 may already act as a support. And again, one step at a time. As I said, Sterling has really given it back, where it was like kind of holding in the first leg of this euro dollar decline, having to reprice all the euro crosses, selling of euro sterling into month end. We've seen on Wednesday a big leg lower. All of a sudden it reversed and the cable actually got hit pretty hard. The move through 133 and then with the confirmation through 132 and a half has really pushed this thing quite a bit lower. And we are where I thought this would be the danger zone on the NFP today. We are already trading on it. You can see the 131.40, 45 here. We've already tagged it, and then the 131.20 is always also going to be an important support. We are already very close, so it's not going to need a very big beat of the jobs report this afternoon in the US to actually have a look at it and potentially break. And then we are talking about levels somewhere in the 130.40 zone, or why not even go and have a look at or below 130 if the report is really good. A weaker report, I think 132, 132 and a half are already going to be levels that the market is going to look at for potentially a hold, as you can see here, of the bounce, and it's going to take, excuse me, just for a second. And it's going to take a real bad report in the US to take it back above 133 on the cable. So these are the levels that I think we should be watching on the cable side. Again, yeah, no, I need to show you this euro sterling. This is quite spectacular. We were talking in our room about the support around 86, whatever. I didn't trade it because I thought maybe in 2 month end or so we are going to see this really getting tested, and we may have time to buy it, but it actually completely reversed already yesterday. We're already back above 86, 30, 35. Had a bit of a retest during the day yesterday into the fixing, and then it just continues to bounce. So if you look for an indicator of strength or weakness as well, bearing in mind that the euro is not behaving very well, this is really a sign of weakness of the sterling if the euro sterling can rebound that easily. Okay, bear it in mind. Dollar yen, it's big. There is no two ways about it. If you look at yen crosses as well, they are big. Kato may say whatever he likes, but this is really big. And for this picture to turn around, it's really going to take a very negative jobs report in the US, which is going to weigh on risk as well to turn it around. And where can it turn around? I think we need to monitor this 149, 148.70, maybe 149.30 already, to know whether this is going to really turn around. For as long as in the medium term this is holding now, we can still push for this 151.70, 152. The 152 has always been a very big decision area, up and down, up and down, up and down. Look further left, you can just look at this 152. It has always been a big zone. Okay, if this goes, then I think we could be off to the races to 154, 155 on a very good report. Imagine that we get a good report out of the States. There is absolutely very little reason to buy yen, especially versus the dollar, because yield differentials, good economy still running in the US. I think today we may be tackling that and even come very close to 152. One a bad one, just from Fibonacci retracement side, we could have a look at 149.70 perhaps, a bit of a blip below 150 to wash out a few weak longs perhaps, but we could have a scenario where we see like this and then starting to move up again anyway. Okay, that'll depend on risk, whether we're really going to see a much deeper decline. Okay. Speaking about risk, and I'm going to have a look at what's happening in the S&P, because it's really been on a tear. We've really seen a very big uh, move higher here on S&P, and I voluntarily left this line in here because I think this is going to be a very important one. 6,200 and 61 and 61 and a half around there. But if you look at this declining risk, we had this blip on the results, etc. Yesterday, when Powell came out with the tariffs, etc., the market all of a sudden turned around and said, like, "Hang on a minute," and we have seen a big drop in risk as well. We've seen a big drop in the equity markets, globally speaking, in the equity markets. Now, watch out for what's going to happen this afternoon. I think since we are trading like already below those levels, we're hanging around actually those two lows that we have here. If you close below there and you close below 62 three quarters, this could be in for another move lower. Okay, and then you're going to have to watch the 6200 level and the 61, I'd say 61 and a half. But this is going to need a pretty good job report to reverse again. Okay, it can, because of the importance of the job report. It can reverse, all right, but it's going to take a really good one because Trump sent a few shockwaves through all things equity markets. Okay, and you can look at the whole spectrum. It is a sea of red in all the equity markets today. Um, right. Let me stay there. This is again what I this is Euro Swiss. This is again what I told you. Every month and the Swiss is getting bought. And yesterday we actually had an extension of the whole thing after the fixing. I think a lot of people, short-term people or people having their stops around there, they got a bit hammered there and got stopped out. Luckily, as I said in the room, I had been reducing my positions around here so I could weather the storm. I was actually planning to buy more, but then I didn't because it just wasn't looking um it wasn't looking like warranted to buy more, and I was actually thinking, okay, let me just put my stop below the prior low here. And then came how I call it, the National Bank of Trump. He intervened in the Swiss franc market, and he he completely reversed the picture on his own with those 39% tariff slaps, and there's still pharmaceuticals as well on the side. And we know that Switzerland is a big pharma country too. So he reversed the picture. Okay, we know that fundamentals are still playing against the Swiss franc, but this is really the Trump move. So a good few of us who are short Swissy in the room got saved there. I don't know if I want to thank him, but anyway, he did save a fair of us, a good few of us positions there. We're trading back above 93. We're still going to have to watch those levels around here. If it ever turns around, it could because of euro weakness also. But at least for now, slapping tariffs on Switzerland has had an effect, and it had an effect obviously on the dollar Swiss as well. Yesterday, the dollar Swiss was not participating in all things fixing, etc., or in the dollar wrecking ball. It was hanging around here, but then on those tariffs announcements, the Swiss franc is catching up. We are coming into an interesting zone here. Okay, high 81s. If it goes, there is a potential to push up back into with a probably an intermediate station into the 83s. 82 and a half is going to be the next level. Okay. Um, Ali, I'm just going to quickly look at your question because I'm running a bit out of time, mate, to start to talk about writing trades and things like that. That is going to be a bit of a long story. But Ali, go onto our webpage and put your name and email address on our mailing list, because then you can but then you can listen to our webinar that we are doing on the 7th of August. Okay, well then come and join us on the 7th of August, because we will have this webinar talking about risk, etc. And our whole crew is going to be there. So come and join us there, and there we will have time to talk and look at what people are asking us as well. So quickly back onto the dollar Swiss support of the day, 81.05 ish. We are about 0.5% away. Big one is going to be somewhere around 80.60. Okay, but so look at that picture. We could potentially, because it's a big number, potentially move out further if the NFP is good. And then last one for the road, Canada, and that's going to be a real quick one. Trump does not like Canada. Okay, we are now back above this prior high here. We're trading around 138.75. Told you yesterday, it's working on it. It's continued to work on it. 139.20, 139.50, and then the market will lie 140 if this continues. I guess if the number comes out a little weaker this afternoon, we may have a bit of a setback, but I suppose that somewhere around 138.30, 15 figure, there's going to be plenty of deep buyers in here. It has to get back below 137, 70, 80, 80 to worry the longs, I think. But this can just easily continue up to 140 if we get a good report. And with that, ladies and gentlemen, I hope I prepared you well for today's data and the end of the week. Next week, Ryan will be back, and we will have for sure a lot to discuss on the back of this jobs report this afternoon in the US. Have a great end of the week. Have a great weekend. Trade safely this afternoon. No disaster stories on Monday. Please have a good weekend, everybody. Thank you for being with me this week.